Globe and PLDT, I think you've been seeing it spiking, and they've been paying a cash dividend depending on what price you get it of between 5 to 7%. Of course, they're saying that, well, you can only use so much data and charge so much at a certain point. But at least, or everyone believes that at least, again, they might not be as affected as others as well. And then there are other companies that would traditionally pay the high dividends like your Aboitiz or your DMCIs. But again, since these conglomerates are have a lot of interest in other businesses that aren't into utilities, and maybe it might be affected. But look again at the long term. Probably there might be an effect. They might be affected this year, but if you look back historically, and maybe this is going way back, but again to Lehman Brothers, if you bought these same companies back in 2009, let's say you held it, your cash, your yield that you've been getting would be more than 5 to 7% at this point. So probably, just assume for this year or it won't be as high as expected. But if it does, then at least you're going to get the positive.
Today, we have Luis Limlingan. He's the head of sales for Regina Capital. And for this video, for this vlog, he's going to give his insights on the market as well. I know you've seen him already in several videos also. No, my encounter with you was I met you in Bloomberg, I think two plus years ago already. And guys, super galing niya in terms of his insights also. So you'll learn a lot from him as well. So Luis, welcome to the vlog. I hope you and your family are okay as well.
Yeah, thank you, and thank you for inviting me. Obviously, we can't do this in person, and we're both on lockdown right now. I can see.
So everyone's okay naman. How's the family? Everyone's good.
Everyone's good. Well, again, we're a family-run firm, but obviously, since I am the healthiest by default, sometimes I go to the office kasi you have to fix a lot of transactions with a lot of these funds. So settlement is a bit tedious. We try to minimize it because we don't want people to have a high risk of getting infected. So we have a skeletal crew right now. Again, some of the work has to be done frontline, but as much as possible, we try to minimize it.
Okay. Glad that everything's good. No, let's get into the thick of the discussion. Based on what's happening on the markets, I think we've seen the selling start to subside a bit over the past few days. How do you think this will go in terms of the market in general?
Well, I think what's happening is they are anticipating that there's going to be a recovery. Again, we've heard discussions that this is going to be V-shaped or U-shaped. Right now, it looks more like a V-shape. But what the market is discounting is all the information, and that's different from what's really happening in the real world economy right now. Meaning there is a slowdown, and I think they've already said that we're already in a recession even without the data. But I think it's very counterintuitive. Is why do they think that, or why is the market being bought up despite signs that we're already entering a recession? And I think they're anticipating that we've already reached the peak, and that's why they're getting ahead of themselves. So we're seeing this sort of dynamic in the market where there was a lot of panic selling in the beginning, and now they're slowly, a bit more aggressively buying into a lot of selected issues at this point.
What should be people's strategy in all of this? Should they wait until all of this uncertainty is out and then they start to enter at a higher price, or would it be more prudent that they come in now with still a degree of risk that because there's still no cure, there's still no vaccine, we haven't really done mass testing? Is there a possibility that the markets may go down lower still?
Well, I think this is where it makes the current situation different from other crises we've experienced in the past. Let's look at Lehman Brothers. We could estimate the damage. because it was financial in nature. It was a credit crisis, obviously, and you know, this was. I mean, it was very easy for us to to see which kinds of economies and which kinds of sectors would be hit. Now here it becomes much more different. In fact, I think one strategy that I'm doing, and I think a lot of, or maybe others are doing, I ask people in the medical profession because me, I don't really know this virus. I mean, I'm sure everyone has started reading up on it. It's the first time I found out like how a vaccine was created, how many clinical trials are needed, and then there we hear all these news about medicines being developed.
Mm-hmm.
And I think that's why probably some investors are already buying it. It's because they believe that some of these medicines that are being tested, I think in other countries such as Japan right now, they said that there have been suggestions that they might be effective. That's for treatment, and of course, there's one for a vaccine that will prevent it, which will prevent it from happening. So that's one strategy. If you believe that, or if you based on what you're reading is that they're very close to finding either a cure when it happens or a vaccine to prevent it, then probably coming to the market. So I think that's where we're all on a level playing field because I don't think the retail customer is in a much more disadvantaged to the investment banker because we don't. This is something that's totally out of our comfort zone. Um, Second, I think just look at what's happening with the movements. I think since everyone is at home and can monitor it much more, I guess discerningly, I would probably look at the volume probably. Value turnover when it happens, net foreign selling and buying, those indicators are probably ones you should look at. I think, for example, today we were about net foreign selling of negative 270 million, but the market was up. So what does that mean? The locals were buying. So that's one indication that probably maybe the locals have conviction on the market when the market is up and yet there's net foreign selling. The other thing is which will also make it difficult for lack of data. Between now and May, we're going to have all these information coming in that is going to make a much more informed decision. So probably that's when you should make your call whether to buy, to hold, or sell if you've already made a profit. On May, you have the GDP data. You're going to have corporate earnings. So those are the big determinants. And right now, everyone is in the dark because they're just making their assumptions at this point. So that's how I would be playing out in the short term.
To add to that, no, you mentioned about the GDP, and a lot of people have been saying that what's going on here, it's not just really the coronavirus, but it's how it will affect the economy after. Because at the end of the day, it's pretty evident. For example, the airline industry, they literally have no operations. They're laying off people. Then you have the whole events industry also all earning zero. Then you have the retail establishments. With this regard, no, you think this will drag on even though we find a cure for the coronavirus until behavior of people that life is normal. I think the difference also with this from 2008 is in 2008 it was a financial crash. People were still spending, people were still out. Today, even though may pera sila pang gastos, they can't actually do it as well. And they just announced that the lockdown will be up until the end of the month. How big of a ripple effect will that be to the entire economy as well?
Well, on your first question is, will it last longer? Now, this is just based on my opinion, based on what I'm seeing. Again, I'm no medical expert, but I think this is going to persist. Again, using our favorite example of the Lehman Brothers crisis, or even the Greek debt crisis. Yes, when there's a collapse in the housing market, or when Greece was going into default, or supposedly going to default, there's an opportunity for buyers, and they were willing to snap up anything at a good price. Now it's much more different because I think you have to understand, the behavioral aspect of this and the market psychology. Because if things return to normal, are people going to be incentivized just by cheap prices to, let's say, travel, to go out and hang out with their friends in the bars. I honestly think that might not be the case. Probably they're worried that, and they're going to change their behavior. That's going to be infected. I think a lot of the big tycoons worldwide have been saying that after this crisis, it's going to change a lot of how we do business, how we interact with people socially. So again, looking looking ahead, I think it's going to be rather slow. But that being said, there's still going to be winners and losers. Probably we've seen that people are going to get used to using a lot of tools, let's say, to make it more convenient, whether it's delivery, whether we're going to have a meeting online. So a lot of these avenues and conduits probably are going to be used. And maybe those who are in that industry are going to be benefiting. I think the more obvious ones they're saying, of course, is pharmaceuticals, those that probably have a lot of business that's online. So it's going to really change a lot of how we, how we, I guess, go about our daily lives. And I think that's what's going to make the recovery much slower. There's a lot of adaptation that is going to be needed when, finally this lockdown does end.
Great insights. I wanna go and dwell in more based on how you would advise people. No, what's your advice for people who are long term investors? They bought at a relatively higher price, and they have cash right now. A lot of people are saying get out first because we don't know what's gonna happen. Or would it be better that they just hold on to their position then, or and add some more if they can actually do it as well?
Well, I would be more of a uh, day trader at this point, and the reason I say it is because there's a lot of uncertainty, and if I can make a bit of a profit, which you can, I would probably just pay the market because again, there's a lot of uncertainty. Uh, yes, there's recovery, for example, again, and then I've been hearing news from other countries such as I think Japan, I think Singapore, that there's been a second wave, and now they have to enforce these measures just to stop the virus from spreading. Now, the reason why I say you can go day trading, if you look at the market the last few weeks, on some days you're up 3%, then the following day it's down another 3%. So if you look at that, you're able to make a margin of 5% minus the friction cost, probably of 1%. So if you can make, you can really focus on a uh, specific stock, a specific, company that you probably have been following over the last few weeks, since we all have more time now to be monitoring. And I think probably just don't be so aggressive in your position if you're short term. In the long term, I think I also wouldn't be aggressive. The way I would play it out is I'm looking. My first, the first thing I would look at, and before I make my first position are is the um, are the number of cases, do they look like they're going to peak, or is there probably going to be a vaccine, or rather they're going to be finding a cure. If I feel that we're getting close to that, any of the three, I would probably take a position as a long-term investor. The second wave would be in May. Again, right now, it's anybody's guess as to how GDP or corporate earnings are going to be affected. And it's affecting it every day, because every day that this lockdown persists, every day that there are going to be cases, business isn't going to go about its regular day-to-day activity. So probably everyone has to be revising. I have to be blunt, but they have to be revising it down. So that will be my second tranche, right before after the data comes out, because if for example GDP or the corporate earnings are well below what everyone was anticipating, there's going to be a sell down. Okay, but of course if it's above, and if you think that might be the case, then probably buy right before that happens. Now my third tranche would probably right before or when probably this is going to resume normally, when the lockdown is going to be finally lifted, and then we can go about our daily business. Then that means we're going to be slowly making a recovery. So I would divide it into those three tranches if you were going to be a long-term investor.
Good, those are good insights. No, a question on top of that. There are a lot of people also watching this that are dividend investors that all they care about is as long as the yield is attractive, they're okay with it. Given that over the past few weeks, there were a lot of stocks that their yields have been ridiculously attractive, but the threat that since earnings might not be as good, the yields might go down also. What do you suggest to those people that they just really want the passive income from the dividends?
Well, I think it might not be uh, the regular cash dividend they'd be expecting. But if they really are adamant to get the the companies that pay the regular dividend, or rather the more consistent dividends, they're probably looking to utilities.
Mm.
It's very interesting how it changed. Last year, people didn't want to get into utilities because I think the administration was looking to them because of the regulation. Now everyone wants to get into utilities because I guess it's more uh, it's more passive. It's I guess it's less affected by what's happening. I guess by the pandemic. So of course, like your Meralco, for example, we don't know again. I think everyone assumes that consumption of electricity is going to be down, but at least Meralco is still they're still generating electricity for both retail and what is
Commercial.
the the higher
Industrial.
the corporate accounts, right?
Mm, mm,
Globe and PLDT, I think you've been seeing it spiking, and they've been paying a cash dividend depending on what price you get it of between 5 to 7%.
mm,
Of course, they're saying that you can only use so much data and charge so much
mm,
at a certain point. But at least, or everyone believes that at least again they might not be as affected as others as well. And then there are other companies that would traditionally pay the high dividends like your Aboitiz or your DMCIs. But again, since these conglomerates are uh, you know have a lot of interest in other businesses that aren't into utilities, and maybe it might be affected. But look again at the long term. Probably there might be an effect. Um, they might be affected this year, but if you look back historically, and maybe this is going way back, but again to Lehman Brothers, if you bought these same companies back in 2009, let's say you held it, your cash, your yield that you've been getting would be more than 5 to 7% at this point. So probably,
mm,
just assume for this year or it won't be as high as expected. But if it does, then at least you're going to get the positive.
because there are two theories behind it. A lot of people are following suit about what's happening abroad. Some companies abroad have slashed their dividends already, and then some also have slashed growth plans for the next year. So people are thinking lower growth plans, probably lower income as well. It will impact their ability also to give out dividends. So yeah. Uh, in terms of this, no. What's your advice naman for people who a lot of people want to say come in right now because it's cheap, and there's a lot of people who are not investing yet, who want to actually try it. Do you suggest to people who have no experience to come in now because they're say a lot of people have been saying that oh galing 9,000 yan nasa 5,000 yan, even if you make a mistake your downside is smaller. What's your advice for them?
Well, I think what everyone needs to know is what are the risks that are
Mm,
involved when you get into investing.
mm,
Obviously, if it was risk free, everyone should be jumping in, but
mm,
that isn't the case. They they should understand it is the Philippines, since it is a developing economy, it's high risk,
mm,
but it's also high reward, and
mm,
that's why I think the foreign funds
mm,
understand it, and that's
mm,
why they come in
mm,
because again, what they're getting in probably investing in the U.S. or
mm,
Europe before this crisis was single digits, which I
mm,
think wasn't
mm,
that attractive. In
mm,
the Philippines, where your growth is 7%, probably you have companies that are growing more than seven
mm,
percent. Obviously, in the high teens, so that's why they're
mm,
coming in.
mm,
Now, let's see let's look at the information right now. The market year to date is down. I think close to 30%. I
mm,
think 28% the
mm,
last time I checked it.
mm,
Probably some companies are much harder hit than others.
mm,
If we average these companies are down 30%, does that mean growth, is going to be down 30%? I'm hoping not. I don't think that's going to be the case, especially for the month of April. And I think for the full year, we've seen that the projection of uh, of the administration and other independent bodies is that we're going to be growing at maybe 2 or 3% for the full year. So if that's the case that we're growing 2 to 3%, and yet the market is down right now 30%, I think there's a bit of a disjoint, right? And you can see that yes, it presents some buying opportunity. Now, of course, there is this again so many unknowns which I think could induce panic selling. And I think these are warranted. We don't know how long it's going to last. It was just today that they said that there was going to be a lockdown. So I think even if the US was up 7% last night, we were up just a little over 1%. And I think that, everyone's just, recalculating these assumptions as we go along. So up until yesterday, we were assuming by the end of Holy Week, lockdown would be lifted. But now we're going to be moving it to April 30. So I think that's the way you have to be looking at it at this point.
Okay. Last two questions. For those who are watching that want at least to be guided also no on what is there a basket of stocks that you would want them to focus on while all of this is happening so that when the markets really fully recovers, these are some stocks that hey they might have a bigger shot of rebounding better and faster.
Well, my view has been much more traditional. They, from my background. Again, I probably look at it to three. One is looking, and these are mostly index names. Look at the companies that probably the foreign funds will probably buy into once it becomes we go back to business as usual. So these are your SMs, your Ayala Corps, because I think these are a proxy to the Philippine economy, and that's why probably they're going to be buying into it. Second, I think is that is like your investment thesis. What are the companies that will represent the recovery of the Philippines and are the proxy to the foreign fund? The second, I think, is more of your defensive issues. So, let's say there's no recovery, at least, konting consuelo lang, di ba? So, again, I'd be looking again at your utilities, your Meralcos, your PLDTs, your Globes, whatever has an attractive dividend at this point, and it's probably it is more defensive in nature. And when I say that is, again, if the pandemic will probably persist for the next few weeks, then at least you know that sales won't be as affected or hard hit as others. The third one is probably your speculative play. And I think a lot have been betting on retail at this point. We've seen how Pure Gold and URC have rebounded because, again, there's going to be a lot of demand for these goods. And we can see, or we have heard anecdotes about people hoarding at groceries and lining up and queuing. So they're saying that probably these are the ones that are going to be benefiting. So those are the three ways I would be coming in or positioning into the market during this time.
Okay, to recap it, proxy to the Philippine economy, defensive stocks, and speculation on retail. Okay, final words for people in this time, no? And I ask this question all the time. A lot of people are scared. A lot of people are depressed. Also, anything that you can impart to them to get them through into this time. And also, if they'd like to contact you, they'd like to learn more about stocks or actually trade and engage with you, how can they get in touch as well?
Well, again, I think these are very difficult times, and I think again we really have to pull together. But taking that aside from someone who wants to use this opportunity to come into the market, look at how everything reacted historically. Again, there's lack of data, but we've seen um, from the past how the markets have reacted. We've seen during Lehman Brothers it fell 50%. During the Great Recession, it fell I think 70 to 80%. I was reading one anecdote from this American who was actually born during the time of the Spanish flu, and she could she I think she was born maybe 2 years before the Spanish flu, and she was 102 years old. She was saying that um, based on yeah, based on what she's witnessed historically, for the Spanish flu, she couldn't really make any, I guess, parallelisms because she only got this from secondhand information from her father and her uncles. But she was saying that the crisis right now, she said, is almost similar to what happened in World War II because they said that she was planning to get married, but her husband got called into war, and then I think they were saying that a lot of the factory workers in the Midwest had to move to California because they said they were constructing um, ships, right? The battleships, which they would be using for the Navy. So she's saying that things changed, and yes, it went to a halt, but people learned to adapt, and afterwards it did go back to normal. It took a while, of course. The war was 6 years. Let's hope that it doesn't reach the same length for us. But she said that history does repeat itself. We will learn to adapt and survive. These are very trying times, so I think we just have to make the best of this situation and probably look for opportunities as investor. Now, for those who want to get in touch, you can use my email for work, and we can chat about the market. I think everyone has lots of time to share their input, and I wouldn't mind also for hearing other people, especially those in different fields. It would be nice. Um, I it's You can get in touch with my. Do I say it here or do
Yeah,
I?
and I'll also put the link below, but you can say it now.
Okay. Yeah. So it's Luis.Limlingan at reginacapital.com. So it's a bit of a mouthful, but I think you're going to just type it later. They can just email me if they have any questions. And this is a good time, I guess, for everyone to be sharing their thoughts on the market or what they think is going to be happening, or how this pandemic is going to be taking its course. Afterwards, I'd sure love to hear from you. And of course, if you want to look into the market and start investing, I'd be happy to entertain you as well.
I'll also put the number below if they'd like to call your office as well. Pero guys, get in touch with Luis. Super, super galing yan. He'll help you. And yun, and super yaman pa, kaya wala kayong problema sa kanya. So,
mayaman sa kaibigan sa
So, I hope you guys got a lot from Luis, no? And thank you so much for being part of this vlog. This is a very different vlog. We are using a different platform. So, but I hope you got a lot from his insights. And the whole goal of while we're doing this, hearing different thoughts of people, is so that you can get as much information as possible so that you can decide. Because at the end of the day, no one knows everything. At the end of the day, also you will act based on the information that you know, and it's nice to hear a lot of smart people like Luis Limlingan from Regina Capital to be part of this. So thank you, Luis, and thank you to everyone who has been part of this. Leave your comments below if you guys have any questions. So I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all. And we're